How's it going tonight, boys? So, had a few issues there, technical glitches here and there, but let's see if we can try to get through this pretty quick. Got a big day ahead of us. Crazy short squeeze today, but let's go ahead and start off with the news of the market, and then we'll just keep on rolling from that point on. Markets rebounded by about 2% on Thursday, hoping the PCE price index would confirm a slowdown in inflation. Index is expected to hold steady at about 0.3% compared to last month, but fall to 4.5% compared to last year. That is a 0.1% decline in inflation, but not enough reason for the market to rally. The market hopes that inflation will fall more than expected and lead the FOMC to begin pausing its interest rate hikes next week. Now, the risk for the Fed and the market is that pausing will allow the economy to regain traction and sustain inflation. In that scenario, the Fed will have to hike rates again later this year, possibly at a market surprising pace. With oil prices hovering at levels not sustained in over a decade, it is unlikely inflation will turn negative, and there is a risk that oil prices will rise again. Oil prices are tied to the economic outlook, and if the Fed surprises with a pause next week, the outlook will brighten and oil prices will also rise. So today, we did see the S&P saw 88% of names actually rise today. Let's go ahead and take a look at those. Let's get it over here. We've got our, let's go ahead and jump down to these spiders here. So yeah, we saw about 88% of names today rising, and they all closed in the green. And then we saw that, which was a good economic indicator there for today. And we saw the VIX drop back down to 17, which is a critical level that we've been talking about over and over. So we're going to keep an eye on this VIX as we go into tomorrow, and we'll give some of those numbers later today. So after today's big rally, the only major U.S. equity index with a bearish immediate posture is going to continue being the Russell. The Russell is also the only U.S. equity index that is not trading above their rising 30-day moving average. We've been talking about that over the last couple of weeks as the short term, that we always also use those on the daily with the Keltners, the 1340, of course, you guys know. But yeah, so that is a key to keep an eye on some of the stuff that's going on here in the Russell. But looking here below, we can see that all of these sectors, all 11 sectors actually finished higher today, with obviously communications, home builders, we had consumer discretionary, technology, real estate. All of these were very high, all closing well above 2%, as we can see here. And then the laggards today were industrials, materials, energy, and healthcare, which also do have a weekly bearish immediate postures. Again, weekly as in W-E-A-K, not E-E-K. And the rest are all very strong bullish. So we'll keep an eye on these bottom ones here. They all close green, but they are a little bit more bearish if you look, and you can kind of tell here on the 15-minute profile. It's pretty obvious to kind of see what's going on in there. So U.S. equity soared, lifted by tech stocks and better than expected earnings that we can see right in here coming from Meta. The NASDAQ and S&Ps leaped up about 2%, and the Dow added 1.5%. So Meta surged about 14% as they exceeded virtually every financial metric in the first quarter, and then they also predicted current quarter sales that were well above forecasts. All the other FANG gang names also took off to the upside. Of course, we had Amazon, which shares jumped about 4.5% and then continued spiking in extended hours trading following their after the bell earnings release. And we went directly into this 120, which we have been talking about all week, resistance, and that is exactly where they hit and then just sank right back down. So tomorrow morning is going to be very interesting to see where they open up. Now, they did bounce a little bit off that low there, but we'll have to see what they can do as they move back up tomorrow when we get more into the morning session, especially pre-market. It's going to be interesting to see where these bad boys decide to push back up there. Now, the market did get a boost from some other strong earnings reports as well. We talked a little bit on this last night, but shares of Honeywell rose about 4% after the conglomerate's earnings and revenue came in higher than anticipated. We also had earnings from Hasbro. They reported a surprise profit and sales beat forecast, boosting the toy maker's shares, which was pretty impressive. And I mean, this move was just absolutely beautiful. I mean, 14.6% in Hasbro. That is a massive move for a $50 stock. That is now almost a $60 stock. So keep an eye on that morning, see how they trade as we go into pre-market and the moves. We also had Comcast earnings, shares gained as the cable media and entertainment company also exceeded quarterly expectations. Another big fat mover. I mean, 10% on a $40 move, $36, stock that moved up to $40. I mean, that's a huge move. So very impressive there. Of course, we can't forget about FRC. So First Republic Bank, they did rally back a little bit today after plummeting the past 2 days. That is helping a little bit with these regional banks. And of course, we watch the KRE. That is the regional bank ETF. So I'm going to keep a close eye on this as we move forward into next week, especially as we get closer towards the FOMC print, I believe, on Wednesday. Now to some of the losers from today. There weren't too many, but they are a couple of names that we want to keep an eye on the sector sympathy plays for possible lotto plays tomorrow. So the first one, of course, is going to be Southwest Airlines, ticker symbol LUV. Shares sank on the carrier's larger than expected loss. A lot of this was related back to those thousands of flight cancellations it had during the holiday travel season. If you guys remember, we talked about this while it was happening, and then they just had another, I think it was a couple weeks ago. So it's not too crazy that this happened, but they did bounce back a little bit better than expected. So we'll keep an eye on those as we move. The big one that I was interested in was Caterpillar. Cat was the only stock, though, in the Dow in the red as the earnings report raised concerns that demand may have peaked. So we'll keep an eye on that. And of course, it got hit pretty hard initially here, and then they did get a nice little push back up. So that's good to see. So much worse at the beginning of the day, and they really, the whole market just started moving up, so it did pull them back up. They still closed red, but it's very important where they came from, right? So the fact that they went up that much is really important. So we'll see if that carries over into Friday trading whatsoever. The other one that, of course, we were watching here a little bit was ABBV. So they lost ground on disappointing sales of some of the biopharmaceuticals firm's key drugs. This thing was down almost 8% today. And it will be the same thing that will be very interesting because we had a lot of bio names that have been up through earnings so far, and we get some more next week. So it will be interesting to watch that sector as a whole just to kind of see where they move around this season. So oil futures were trading up. They got a nice little boost there end of day to kind of push them up even higher. They've had a pretty tumultuous week, as we know. And as you can see there on the left side of the chart, gold futures were trading up a bit today. They have since in aftermarket trading just pulled back just ever so slightly. But we'll keep an eye on metals as we go into tomorrow, next week as well, with the FOMC on the docket. That's always something we want to keep an eye on. Of course, the yield on the 10-year note jumped today, which we will address more of this tomorrow and over the weekend. This is a very important metric for the current state of the overall broader macro picture. But the 10-year rallied to 3.52%, as you can see here. And now, while the long-term bonds, they did get hit a little bit and slipped on a few of them, like ZB was down. That's the 30-year. They were down about 0.99%. So kind of keep an eye on that. And of course, we watch the 7-10-year. That is like what mortgages are based off of. And then for the yield curve inversion, we watch the 2-10. So we'll keep a definite eye on that. And we're going to go more into yields and into PCE stuff, FOMC stuff over this week. I've been talking about it so all week, but over this weekend. So we'll keep a close eye on those, and we'll have a little bit longer video that will go into that stuff this weekend. Moving along, the US dollar did have a decent little move up, and then it kind of got hit while equities were so strong today. Obviously, after hours, it's been bouncing back so far, but it did rise against the euro and against the yen today. And now you can see after market, the yen is just ripping. There's a lot of news going on in Asia's markets right now, and we will address that in the morning after it kind of settles and we digest it a little bit. But it did get hit against the pound here, so that was it was a little bit of push-pull on the US dollar today, so that was a little bit different than what we've seen this week. Cryptocurrencies, Of course, now most major cryptocurrencies have reversed earlier losses and did post nice little moves up so far. Traditional Bitcoin right now is only up slightly, but you can see this move from earlier in the week, and especially if we go to that 4 hour, we can really see, I mean, we got hit pretty big, made a big bounce back, and then sank really hard. I mean, this move down was really strong, but we've moved back since. So Bitcoin has been just absolutely all over the chart, as well as Ethereum, and Ethereum basically in the same spot as it was. Looks a little bit more bearish on the 4 year than the Bitcoin does, but for right now, that is where we kind of stand. Now, a couple other things that we had today that were important numbers. Let me go ahead and move over there. We had pending home sales did sink. Contracts for home purchases unexpectedly fell in March for the first time in 4 months as buyers were squeezed by limited inventory. So the NAR, which is the National Association of Realtors, pending home sales index, which this is what this is. I need to move over. It hates the low term. It makes sense though. But based on contract signings, fell 5.2% from February, and that's what this number is right here. And you can see this big fall right here. This is on a you can see this basis here. That's a pretty big fall, right? Compared to, I mean, they've had some big moves up, so it kind of makes sense that we're kind of seeing a little bit of this. But they're saying that this was the biggest monthly decline since September, and economists had anticipated a slight increase. So it is interesting that we're starting to kind of get towards summer. So things are gonna get very, very tricky here, especially depending on what happens next week with the FOMC. So that said, let's go ahead and move on to the nuances of today's session. I'm going to go ahead and we'll play our replay while we go through the recap playback here real quick. So in the RTH session, the market opened precisely at 4,100. And this initial little drop there saw buying activity at the value area high from the overnight session. This is critical to understand in price action. So the VIX breached its support level of that 17.8, as we know, immediately it opened, which was noteworthy. This nuance helped buyers in reaching the first major intraday upside target right up here at this 41.14, 41.20 area. The market was one-time framing up intraday for the first 3 periods, and a poor high developed in the second half of this IB session, indicating crowded buyers. So this often leads to a reaction where prices move away from that area to shake out those weak longs. This pullback, though, that we got right there, this pullback was the most interesting sequence of the session because VIX was holding below 17.8, confirming the strength of the market. So what this means is that it is risky to chase shorts contextually. So these reversals are more appealing if the market reaches a key upside target without VIX confirming its strength. So what came as no surprise that buyers obviously found the pullback very appealing, as we can see here. I mean, once that happened, it was a really, it was off to the races. We ran right back to these key levels that we have been talking about so often. So these were targets 3 and 4, and we actually technically ended up hitting target 6 today, which was absolutely insane. So the only places we were able to get, so after night where we had talked about last night in the video, this is where we got all that chop for hours and hours, and then the number came in, it sank right perfectly into support that was quickly bought up, and then the market opens up, and what do we see here? This is exactly what we wanted to see. We get a nice little pullback here, and it did not lose that 4,100. That was the critical point, and the VIX is showing strength here right at this point, and they find this very appealing, and they start buying, and it did not turn around from there. The only other place where we got out right in here, and then there was a little bit of buying. Now, I did not add here. There was no way. This would have been the third ad. There was no way I was going to take that kind of risk after a beautiful day up like this. So we just rode, as we say, we rode our runners into the sunset, and you can see we then nailed right here. And you guys have seen these targets for 2 weeks now, and we talked about them all this week. None of these should have been a surprise at all. And then after hours, got a little bit of gap down, and so far you can see here after hours getting some really, really nice consolidation, and we'll talk about that a little bit in the plan for tomorrow. So yeah, today we saw a massive short squeeze, and as we talked about on the video last night, and this is the quote, RSI, as depressed as it is, and short squeezes can be extremely violent and typically occur when a failed support reclaims, unquote. And this has been standard behavior for ES for months. We essentially just see, dip, flip sentiment, and then squeeze. So the dips vary in size and length, but there is always an underlying bid. Since the March low, right in here, inverted head and shoulders, there have been 200-point dips. March 22nd, which was 130 points and was bought, and then the current leg, which was also about 130 points and then bought. The market likes to do things in these sequential events, guys, and this is how we kind of prepare for them. It doesn't have to be the same every time, but it'd be stupid to not understand that, analyze it, and then use it. So looking at the price action here, we want to outline a few key structures. So firstly, of course, is going to be the green rising channel here. Okay, as we have discussed, this channel shows the power of technical analysis, right? It contained all of April's price action, and then the breakdown was earlier this week, right in here, which of course then triggered these shorts. Almost always then happens when a major structure breaks out or down is it back tests, and that's exactly what happened today. Right? That's exactly what these like to do. When something major like this breaks down, it doesn't want to just keep going down. That's why we always say the market doesn't move in one direction. When a key structure breaks down like this, it wants to back test those structures. And that's exactly what we got today. Yes, we got a little cherry on top of that, but we did this. All this really was in the broader picture was a back test of this broken structure that we had over here. Okay. And that's exactly how you have to look at these things as we move forward. Okay. So yeah, I mean, it's really what happened here, and it's why we were looking for the rally. So the backtest point is now currently this 41.28, 41.33, and so far this backtest has cleared, invalidating this week's breakdown. And as we have pointed out multiple times, we consider bulls in control above this, and then of course, bears below. Another one here, let's go ahead and pull this off for just a second here. Another one that we want to talk about is we have a couple of other, you've got this purple flag here. There's also now a downtrend channel that we have that we drew in on the lower ones, which is extending from the April 18th high. The resistance of that also just happens to be this exact same zone here. We broke through that cluster of this little bull flag and broke out today. So there is a big issue here though, in that there has yet to be any pullback in this leg from 40.72 yet. Not until we have some good red candles and then obviously seeing what supports are defended will it be possible to verify how sustainable this move actually is going to be. This easily is, could be viewed at, oh, it's nothing, it just back tested and we're back up in there right now. But yeah, and even worse, we know what happens after big trend moves is that there's always going to be a high probability of multiple days of chop. So, after days like this, it's extremely important to put the crystal balls away and just stick to reactive trading plan and just let price show its hand. So really, the real test for bulls is going to come on the first pullback, and believe me, there will be one. Specifically, the ability of bulls to defend some of today's breakout levels, and in particular, it's going to be this kind of this little zone. This is the RTH, by the way, highlighted right here, guys. I was just doing some work earlier there, but it's going to definitely be that 41.28.32, and then we've had some big trend day, today, a big leg today, so we're going to expect complex, volatile action now. The bull case would look, though, something like a dip there, defend, play a little ping pong in the 41.66, 41.30 range. That's kind of the noise range there, and then attempt a breakout to 41.75, 41.87, and then likely try to retest that 4200, 4205 with the big level that we have now talked about 2 different times over the last couple of months that saw huge turn dates from them, 42.11. I can't say it enough, and we've talked about this and had to basically prove that it was right now with 2 gigantic moves away from it. This would be the third test if they get it up there. I would be highly suggestive to pay attention to that, because if that breaks out, we honestly could start to push up. There is nothing saying that we are going to break that at all, and in fact, it's going to still take quite a bit of work when we get back up there. It's not this slice through butter, oh, it's so easy, as people that said that now have learned the hard way. Now, we usually try to provide spots to add on strength, but given the big move we just had, this is going to be extremely difficult to do here. Looking at the bear scenario though, so we do not consider there to be a bear case as long as we are above this 40.88, right in here, the bottom of this structure. You can see it all right here. So that's where the bear case really kind of begins. But however, the failure of that 41.33.28 would definitely, would not be a great sign for bulls. So one could attempt to short there on that breakdown, but as always, we do not chase. So we want to see a good bounce out of that zone, you know, something like test it, try to bounce, fail, test 41.18, then try to bounce, then fail. Like, we really want to see those moves. You know, you want to see something, you know, like it want to come down in here and kind of get that little bounce what we talked about yesterday, and then, you know, and then it gets that continuation. That's where you want to take that. You know, you don't want to try to get in there before that. You're just going to get chopped up. The risk is always going to be there. You know, and we could likely consider short 41.17 for a move down to test 40.99. The real sell-off, though, will start on the fail of this 40.88, and we would short this very high 40.70s after a good bounce at 40.88 that fails. So these above trades, obviously, what I just talked about right there, are known as breakdown trades, and they have a much higher loss rate. So that's why we want to do this. Anything else that you're going against that, you're really, really risking all that it would be is like a shakeout. That's why it is so important to understand price action and understand how to trade the auction. And all it is supply and demand at its finest by using level-to-level strategies. So we have had one big directional run today, and now it's likely time for complexity, okay? So we prefer to keep forecasting to a minimum in these spots and be prepared to react. The core thing for bulls will be that the first pullback, what it looks like. Probability right now, though, is saying that we can back test the 41.31 gravity point, 41.18 at the lowest, hold, then try to work back up the levels. Bulls are firmly in control above there, and if that fails, then we work down to 40.99, 40.88, below which we sell yet again. So going into tomorrow's session, we will observe order flow around the 41 level, and we are going to want to see holding above that, which would target 61, 80, 94. These are order flow levels, so if you combine those with the supply and demand levels we just gave, they form nice little beautiful zones. So a break and hold below 41 would target the 27, 17. See how close these all line up. And then additionally, pay attention to the following VIX levels. We're going to give you 1796, 1702, and 1660. Those levels can provide confirmation of strength and or weakness, and that is basically where we stand with this, boys. We will be on pre-market to go through the following the second half of PCE, which is far more important, and then we will go from there, and we will be watching the price action, and we will have a full update on that, and we can walk through. And we want to kill tomorrow morning, get our money, get out, and send everybody off into a good weekend. So we'll be on there, and I will see you guys in the morning. Have a good one, boys. Cheers.